Hey everybody, welcome back to the channel. I've got Jack from Nobody Special on here. We're going to be talking about banks and how they're collapsing before our eyes. We're making history. We're watching history unfold. Jack, how are you doing?
I'm doing good, man. I am running on coffee and high anxiety right now because it's been a nutty couple of days. I haven't stopped going since Thursday afternoon, really.
Yeah, it's a financial YouTuber's dream week. And I've got more work than I can do in the welding shop, and it's been super busy around here. It's all blessings. But I wanted to get you on here because I'm a hard asset guy. I'm real estate, precious metals, businesses. I play stock market, but it's mostly commodities. I'm into uranium and lithium and precious metals. Like I said, those mining stocks and resource companies. But as far as it comes to banks, I've got six more today that we're going to talk about, and we'll talk about what's really going on. But it's important to know that the First Republic Bank, Zion, Western Alliance Bank, the CMA, UMB Financial, and Intrust Financial are all looking bad. I mean, it's starting to look bad for these regional banks. What do you make of this? What's going on with these small banks?
So those particular names came out today. They were all included in a note that was put out by Moody's, one of the big three ratings agencies. They didn't specifically downgrade them all. They just warned that they could be downgraded. And then also within a few hours or minutes of that announcement, Moody's also just went ahead and downgraded the entire U.S. banking system, citing a deteriorating operating environment. Just some pretty ominous language to come from a ratings agency. So what's going on right now? I mean, there was a panic in banks. There's no other way to put it. It was effectively a margin call. The bank's customers margin called their banks. They said, "We've been watching your behaviors. We've been watching some of the losses you've been taking in these bonds, and we're starting to have doubts on whether or not you can pay us. And so we're taking our money back right now." And enough people did that it turned out it was true. Banks didn't have enough to pay because we all know how the fractional reserve banking system works. They don't have all the money at any given time. Banks only work if everybody doesn't want their money back at the same time. And it started with Silicon Valley Bank. They had a very unique customer base over there. There were a lot of tech startups, a lot of companies that are notorious for burning through cash at a pretty quick rate. And things over in tech haven't been so good since the start of the year. We've seen a lot of layoffs. We've seen venture capital is starting to dry up as interest rates have been rising. And so the unique thing over there was that their customers needed money. That was it, really. I mean, there's been some criticism floating around that Silicon Valley Bank didn't hedge properly, that they should have used some kind of interest rate swaps or instruments to mitigate their exposure to rising interest rates. And that may have helped, but I don't think that would have solved the problem. The problem at Silicon Valley Bank, as simply put, their customers just wanted their money back, and they didn't have it. But the thing is, no bank has the money. If enough customers want it back, they don't have it.
Well,
And
let's
Silicon Valley Bank, the things they did wrong, like the things that were on their balance sheet and their bond exposure and the losses from rising interest rates, that's not unique to Silicon Valley Bank. Every other bank in the country has that problem. Now, there are
so,
varying degrees of vulnerability, but they all have it.
well, look, let's start right there because I want to understand this completely. And from what I understand, uh, CB uh, Central Valley Bank, Silicon Valley Bank, sorry, uh, had about 195 billion out, and they had about 208 on the book. So they puts them at about 17 billion that they had to disperse, and that didn't last very long when they started selling these 10-year bonds that were locked in at 2% interest. They sold them before maturity, and that kind of threw a red flag up to the investors and depositors, and they started essentially making a run on the bank. Am I right so far?
Yeah, they had to sell some of their assets, some of their bonds, right? Real high level, real quick. You deposit money at a bank. Let's stop thinking about banks like vaults where we keep our money. All right. Banks are
Yeah.
people we loan money to. All right. Banks are borrowers from us. So we loan money to the bank. The bank pays us interest. The bank needs to make more interest than they pay us in order to have a business. So the bank goes out and they buy bonds, they buy mortgage bonds, commercial mortgage bonds, and they also make loans. That's how they make their money. They don't have our money at any given time. And that worked really well when interest rates were going down, because the unique thing about bonds, you have to remember, interest rates and prices inversely correlated. So over the years, going all the way back to the really 1980, 81, as interest rates have fallen, these bonds have been getting more and more valuable. The prices of them has been going up. So it's been a great business model for banks. They're making money hand over fist. Well, we've been talking about how the Fed was going to fight inflation and that they were going to raise interest rates until something breaks. Something broke, because as they've been raising interest rates, they've been lowering the value of these bonds. So they've been creating this problem in the banking system as they've been fighting inflation.
All right. So my first question is, who in the heck locks money up for 10 years at 2% interest? It makes no sense to me. As you know, interest rates are coming up. Well, why would they? It doesn't, from a hard asset guy looking out, that doesn't look like a very smart move. I mean, it seems to me that most of the people in charge of all the money are under 30. They've never seen a downturn. You know, uh, interest rates in the teens is just so far fetched for them. Is that'll never happen type situation, but it very well could. Why would they do that?
So it's not really locked up, right? The bond, yeah, 10-year treasury does have a maturity date, 10 years from issuance. But you have to keep in mind that a 10-year treasury in particular, and really any US treasury, but the 10-year in particular, it is the single most liquid asset in the world, right? It is the easiest thing to move, sell, buy in the world of finance, right? I mean, they're everywhere. Everybody buys them, everybody owns them, everybody sells them. So the money's not really locked up. At any given time, the bank can park money in a 10-year treasury, but it's not stuck there for 10 years, because if they really need the money, they could just sell the bond,
At a
get the
loss.
money back. That's the rub, at a
Yeah,
loss,
that's what I
because in a
meant.
rising interest rate environment, now they're selling at a loss. And
Okay.
that's why all the moves of the last 40 years don't work anymore, because rates stopped going down. Now we got an inflation problem. The rates are going up. And the thing you got to know is this thing that happened at Silicon Valley Bank, it was not unique to Silicon Valley Bank. The SVB customers were unique, that they catered to big tech. That was unique about them. But the problem on their balance sheet, the unrealized losses from these bonds where the interest rate has risen and the price has gone down, every single bank has that problem. And that's why, today 6 more banks are added to the list. It's another case of, people are starting to wonder, hey, maybe they won't have the money. Well, I better move it to a bigger, safer bank just in case. And of course, that's making these things fall over like dominoes. And when one falls, now more people take notice and pay attention. And, there's still a lot of people out there that probably don't even have any idea. Oh, I heard something in the news. Something was up in the banks. Yeah, but you know what? That doesn't affect me. I guarantee you half the country's still thinking that way. All right.
Oh, yeah, it's only about 2%. The way I figure it, it's only about 2% are paying attention and bobbing and weaving and getting ready. Um, so the implication of going around the Dodd-Frank Act, that's what they did, right?
They threw it up. They just tore it up and threw it out. I mean, it's still the law, but they don't have to follow
Yeah,
it apparently.
it's called capitalism. It's not. I was actually making a video today and actually accidentally said capitalism. That's actually what it is. It just seems like these people that had over $250,000 in the bank are, hey, we don't want those guys to fail. We need to bail them out, and at no expense to the taxpayer, which everybody watching this knows that is complete garbage. You will pay it in the form of inflation.
Absolutely.
That money
Absolutely.
will leach into the economy.
Anybody watching, can I pause you real quick, Chris?
Yeah, go.
They said most people aren't paying attention, and that's why they're doing that. And I'll hand the mic right back to you. What Chris just said, that you are going to pay for this through inflation. Make sure everybody knows that. Every person who says something to you about, oh, I heard the banks failed, and oh, I heard there was going to be another bailout or something, and oh, that doesn't affect me. Right away, tell them, nope, prices are going to go up again. You're going to pay for this. You bailed out the rich. The poor are bailing out the rich, because who is suffering from inflation right now the most? The poor, the working class, what's left of the middle class. Who's going to suffer from the inflation of this bailout? The poor, the middle class, the working class. And they just bailed out Silicon Valley venture capitalists, the wealthiest of the wealthy in the world, people who have millions of dollars to throw at companies like freaking Peloton. It's an exercise bike with a TV duct tape to it, and we're going to charge people $6,000 plus $50 a month to use the thing. And they're like, sure, here's $100 million. That's who the poor people just bailed out. That's sorry. You can have your dime back now, Chris.
No, that's it, man. That's the biggest takeaway from all this. Oh, the banks failed. Well, that's a small portion of what's really going on, because what's really going on, the big story is, yeah, the bank failed. One day later, they got bailed out with your money. That's the big story. Now the president has said that, hey, banks can't fail. We're too big to fail now. And, all they got to do is do it again. And this is the same kind of crap that was happening in the book When Money Dies. I would encourage anybody to go read that. It's a hard read, but there's situations in there, and it talks about their relatives and friends are stupid. They don't know what inflation is. They didn't trade their money for their currency for the other currency that was good. And when it all really started to happen, the Jewish and the German people were wearing 2 and 3 fur coats to parties. They were living a lavish life, while the other people that were stuck with the mark lost everything. They couldn't afford apples. And then on the heels of that, you had people robbing and looting people. When they would leave their house, they would run up and literally butcher their cows and pigs where they stood in their stalls for food. I mean, no, we're not. It's not the same. We're the world reserve currency. I get that, but to think that we're going to be able to never have a recession ever again, to never, that is never going to happen here. That's what they all said. That's what they said in the book. That's what they always do. They always make the wrong decision. And this is case in point, a $25 billion wrong decision that the middle class is going to bear. You're just going to have to deal with it. And it's going to make the rich richer, and all these people that do these sketchy investing that make a lot of money to begin with, it's going to make them better off. And every time they fail, they're going to get bailed out with your money. It's just
Chris,
wild.
they're getting more brazen, and they're getting more desperate, and they're having to do these sleazy things more and more frequently as time goes on, because there is a limit to how long you can do this. There is a limit. There is a point. You're in metal, you can bend it, stretch it, work it to a certain point, but eventually it's going to break. You keep doing it, you're going to break it. And, that's what they're doing. My banana just died. Hold on a second. I got to fire up my banana.
Is it on timer?
That's bad luck, man. That's bad luck. I can't have my banana going out while we're talking. Where was I?
That's a good analogy. Well, you were bending the metal back and forth. And what happens?
Oh, yeah.
What's interesting about that? Let me finish. This is a little welder knowledge here. When you fatigue something, that's what it's called. It's called fatigue. When you bend it back and forth and back and forth, and it finally breaks. Even when you weld it back together, it's fatigued. It will break again, usually.
Brittle.
Yep. Yeah, you've destroyed it. So that's a pretty good analogy. I like it.
Think about what we've seen, right? The market, when something's brittle, it can't deform, it can't absorb a shock. It just snaps, cracks, and breaks very suddenly, right? And look at what we're seeing right now. 500-point, 1,000-point down days, day later, 400-point up days, 300-point up days. The market is swinging like crazy right now. One day we're going from the Fed is going to hike 50 basis points in 7 days from now, 7 days from now, 8 days from now. Oh, they were going to hike 50 basis points 2 days ago. Now they're pricing in like a 20% chance that they don't hike at all. And these swings are happening in the likelihood of what the Federal Reserve is going to do in a matter of hours. The system is getting yanked in 2 different directions. In a couple of days, we went from deflationary banking collapse, banks failed in 1929, to now we're leaning back towards 1923 Weimar Germany, hyperinflation, endless money printing. And these changes are happening in a span of hours. This market needs certainty. It's not getting that. This market's getting whiplash. And, it's the fatigue stress on the metal. Something is going to break. Something already did break they slapped a Band-Aid on it and they made the larger problem worse. So,
That started in 2008, right? That
well,
was
I mean,
that's when Pandora's box
I
opened.
guarantee you someone in the comments is going to take us back to 2008. Someone's going to take us back to the .com. Someone's going to take us back to 71, and someone's going to take us back to 1913 to tell you when it started. 71 was the gold standard in Nixon.
Yeah, I guess
1913
so.
was the Federal Reserve Act. So, you know,
Well, it's just 2008 was the big one to me because I remember it the best mainly, and it was only like 800 billion. I mean, when we got through stimulating last time, we were approaching a trillion a month.
yeah.
I
And
mean,
that's when just lowering rates was no longer enough in 2008. That's what was
right.
unique, right? We had every little crisis, we would lower rates, lower rates. Well, in 2008, we lowered rates all the way to nothing, and it still wasn't enough. So we had a choice. We could take rates negative or we could print money. We printed money. And then we kept doing that. And then 2020 came along, lowered rates back to zero, started printing money, said, oh, that's still not enough. Okay, well, print more and more trillions and trillions. And we printed even more money. And now we stopped doing that for what, 9 months, 8 months before something broke. We stopped printing money in March of last year. And look
So
where we
this is
are already.
par for the course, right? This is if you start raising interest rates, things start to fail and slow down.
Yep.
Okay, so it failed and slowed down. So now are we some kind of bastard pivot? Is this some kind of you can you create money and also raise interest rates? You know,
Absolutely. Yep. They can do that. I mean, it's think
how are
about
you
it.
going
You're
to
going to
stop
drive around with
inflation?
both feet on the pedals in your car, right? You're going to step on the gas and slam on the brakes at the same time, and then you're going to act surprised when your car doesn't work after doing that for a couple of days. But yeah, I could see them where they're calling it not QE. It's basically QE. They are pumping money into the
Sure.
system with this bank term funding program that they're calling it. Fancy new word salad for minting money into existence. And at the same time, they could be raising rates. And at the same time, they could be still doing quantitative tightening. They could be doing both at the same time. And
It's going to be really, really hard for Jerome Powell to get the status of breaking the back of inflation like Paul Volcker did, his hero. Uh,
he could have
it's going
killed
to be really hard
inflation
to
on
do that
Friday.
when you're bailing people out.
He could have killed inflation Friday. And I'm not saying it wouldn't have been painful, but he could have killed inflation if he had. We got a saying in nuclear, when things are happening and you're not sure what's going on, take your hands off the panel and watch your instrumentations. Don't start manipulating pumps and valves if you don't know what's going on. You're just going to make things worse. Hands off the panel and look. And shout out to my moderator Mish, who reminded me of that one. I was an engineer. We're not allowed to push buttons. We just look at paper and talk about it. But
I didn't do any of that. They said, bail them out, but
yeah,
quick, hurry.
he
My
went to
buddies are in
bailout. He
trouble.
he pivoted, and that's essentially what he did. He turned on the flow of easy money again, right? That was a pivot that we saw this weekend. And there was a lot of people were speculating that maybe Jerome Powell's last act, maybe his great act as Fed governor, will be to kill this belief that the Fed will come to the rescue every time. That no matter what happens, the Fed can just eliminate risk. And my good friend Joe Brown over at Heresy Financial, he says all the time, risk can never be eliminated. It can only be transferred. The Fed does not eliminate risk. The Fed spreads risk around like jelly on a piece of bread. All right. And, it's all piled up in this one bank. They did not eliminate that risk. They just smeared it all over all of us. All right. And I don't think that was the right decision. I think it would have been painful and it would have been terrible for people who banked with Silicon Valley. It would have been terrible for someone who had $1 million in a checking account at Silicon Valley. It would have sucked for people who work for those companies because, me and Mish were trying to figure out some of the math, and by some very conservative math, we figured it was about 500,000 people were fixing to lose their jobs over Silicon Valley Bank collapsing, just with the number of companies that banked there and the percentage of the deposits that were not insured by the FDIC. We figured about 500,000 people in the tech industry were going to lose their jobs. And when 500,000 people lose their jobs, usually that would probably cause up to another million, million and a half, because you've got slowdowns from other companies that maybe they don't go out of business, but they've lost customers, they've lost businesses, or they lost supply chain, or they lost contracts. So you probably would have ended up with a big jump in unemployment. You would have ended up with a lot of people in the poorhouse. you would have had a major, major real estate market crash in San Francisco. But you know what? San Francisco has how many people living in tents on the street? Maybe a real estate crash in San Francisco, though very painful for San Francisco homeowners. I don't want to understate that, but maybe that would have been the opportunity that all those people living in tents needed to escape that. Maybe homes going on sale to people who, through no fault of their own, they were just inflated out of the housing market. Maybe they would have had an opportunity to get back in. People who could actually make the payments. Nope. Instead, they're just going to inflate the bubble further. So, and that's going to hurt. That's going to put more people in those tents, because right now we've got people running up credit card debt. We've got people not paying their student loans, not paying their car loans, and life is about to get even more expensive for them. And I know a lot of Wall Street breathed a sigh of relief today when that CPI reading came in at 6%. 6% is still historically high. That is incredibly high. And the Fed just turned on the money printer. All right, we're doing the same thing we did in 2020, except in 2020, we started with 1% inflation. This time we're starting with 6.
So is there a time? It is. I know that's an open question, but there's never going to be a good time to go through the hangover. You know, there's never a time where they're going to choose the medicine. They've proved that over and over. So the end result will be hyperinflation. That's the only thing. Other than, I mean, if they're going to raise interest rates until something fails, you remember Jerome's house said you're going to feel the pain. Well, that wasn't very much pain. It didn't take long. So I guess if it bothers the middle class, if it really puts us out, then it's no big deal. But if it messes with the startups in Silicon Valley, they're rich capitalism crony buddies. That's a whole different thing. We've got to bail those guys out. No, we've got to keep those guys going.
it's an
I hate to
easier
see
sell on
anybody
the
lose their
public
job.
too.
Huh?
Politically, it's an easier sell. And look, neither party is nobody. I have heard almost nobody step in front of a camera in Washington and say this was wrong to do. We should not do this. They clearly broke the law. Dodd-Frank said that bank should have been bailed in, not bailed out. We passed a law after 2008. Obama had his little signing ceremony with Barney Frank and Dodd. I forget Dodd's first name. Standing behind him, oh, yay, Wall Street reforms. And then they just threw it out. Right. But nobody's saying it was the wrong thing to do, because the public doesn't understand. And I'm not trying to be like condescending or anything, but we don't teach it. Schools don't teach it. Most people don't even understand how making money creates inflation. They've heard it somewhere, but they don't understand the mechanics of it. And so this is an easy sell on the public, because when inflation does come around, you'll just have these financially illiterate imbeciles in DC going on Twitter saying inflation is because companies got greedy. Like greed was invented in 2020 or something. Companies weren't greedy in 2019 before we had this bout of inflation. No, they all just got greedy on Tuesday. Is that what happened? No. But this passes the sniff test with the public somehow. And, no, we're going to bail it out. We're going to print money. Don't worry. No taxpayer money, none of that. And most of the general public doesn't know enough to see through that lie. They don't have the time to invest, to spend, to figure it all out. And so they just swallow it and they go about their day thinking it doesn't affect them. And maybe right now it doesn't, but it will. A year from now, when prices are running again, people are going to say, why didn't somebody do something? Why didn't they see this coming? This is when you see it coming.
You're exactly right. Inflation is no hard sell. A tax is a hard sell. A new tax is a hard sell. A new, you know, anything that they're upfront about that we're going to have to pay for is not going to pass. So
Life is
they
hard.
do.
Life is a struggle, right? You cannot eliminate struggle from life. And somehow that's like a politically dead on arrival idea, right? No, we can just endlessly rob the future to eliminate struggle today and act like it has no consequence. And somehow that's a sell. I mean, we're just, it's a narcotic almost. Easy money is a drug and we are addicts. And that's what it comes down to. And nobody is willing to take the pain of withdrawal. And look how fast, man, we went a couple of hours without a fix, and look how fast they turn those money printers back on.
Yeah, that is that is the biggest takeaway from all this. And where do we go from here? Guys, hard assets. I say it all the time. Jack says it all the time. I'm not pushing gold and silver. My wife sells it, but it I just want you guys to have something. A lot of people are collecting cars. There's people buying art. There's other ways to hedge. Land. I have never regretted buying land ever. Uh, the pond I built, the orchard I'm growing, that stuff is very rewarding, and it's like money in the bank. Food's not going to get cheaper. You could have beat the stock market so far just by buying food when we started talking about it a year and a half, 2 years ago. I mean, that's
Absolutely.
that's
Beans
the
and
big.
rice, man. Best performing asset of 2022 was beans and rice.
It's simple. Things people make stuff so hard, and if you make it really simple, the solution's really easy to see, and you'll notice that they're not going to take the medicine. They're not gonna. They asked Doug Casey asked the Zimbabwe president, "Why in the hell did you print all that money?" He said, "We had to pay our elected officials. We just had to pay our government employees." Well, it didn't end up very well.
Yep.
When the junkie finally gets off the heroin and goes through the detox, it might kill him. That's my fear. If we get too far gone, this thing's going to be really hard to rein in. As it is, it's going to get even worse the longer it festers. So, in closing, do you have anything to add?
CBDCs are coming. All right. We got the answer over the weekend. We've all been asking ourselves for the last year and a half, are we going to go the route of 1929 deflationary collapse or 1923 Weimar Germany? Right. We got our answer over the weekend. They're going to take us the hyperinflation route. Right. Now, I used to say, when is Jerome Powell going to turn on the money printer? And I always used to say, when we beg him to. It didn't even come to that. We didn't even have to beg him. He just turned it on. I couldn't believe how quick they turned it on. That was way too fast for a country that is reeling from inflation. They got to that solution real fast, guys. So understand, inflation is coming. It's coming bad unless everything collapses, but they've shown they won't let it. They'll QE infinity. And when that happens, the only way they'll be able to control inflation with the amount of QE that's going to be required is by rationing of almost everything, certainly the basics of life. And how are they going to ration? CBDC is the perfect instrument for that rationing. And so I think we're barreling down that road right now. So see that one coming. Hold your elected officials' feet to the fire. I mean, a lot of people say, what's the point anymore? I still think there's a chance that we don't have it. I still think there's a few decent human beings left in the swamp, maybe one or two of them. So we just need them to speak up. When CBDCs come up, be ready to fight those.
Yeah, I think they're going to have to streamline the ID portion of the CBDC. They've got to get all that social credit score, your carbon footprint. And they're working hard on it right now. They're trying to get all that put together because they don't want you giving, to the wrong people. They want total control. They don't want a good currency. They want total control. And they want to see everything you do. And I mean everything from garage sales to giving money to your aunt or anything and everything. They want to be able to tax you on a whim. They want to be able to do it is open air prison is what a CBDC is. And we're headed that way. And I'm telling you, probably all of us are going to participate in it. Just like we do this devil money we're working with right now, this fiat currency that's unconstitutional. We're going to use it too. I mean, people call Bitcoin a scam. Cash is the biggest scam that ever hit the planet. We use it every day. But, well, Jack, thanks for coming on, buddy. It's going to be interesting. I'll have you on again as these banks fail and there's more to talk about and more to keep up with. I'll be hollering back at you. Thanks for coming on, brother.
Thanks for having me on, Chris. Anytime, brother.
Absolutely. And guys, have an awesome, awesome day. If you made it to the end of the video, put hashtag capitalism. Later.